Ladies and gentlemen, welcome back to the channel. AMC Stock reports earnings here in after hours. We're going to be going over what the analysts are saying, what the expectations are for AMC Stock. We're going to look at the data, what's going on in the markets, and what I think AMC Stock is going to do following earnings. So let's go ahead and give you guys a deep dive on AMC earnings and ultimately what's going to happen with the share price. So first things first, hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I can assure you, you do not want to miss this if you are an AMC stock investor. So first things first, the FactSet consensus calls for a loss of 25 cents in adjusted earnings per share, down from a loss of $1.76 in the year earlier period. So that's a big improvement. Revenue. Analysts tracked by FactSet expect the movie theater chain to report fiscal third quarter revenue of $1.26 billion, up from $1.005 billion in the same period last year. Admissions revenue is expected to be $739 million, and consensus revenue is expected to be $449 million, according to FactSet. That's where things vary quite a bit with that revenue number. Some people are expecting revenue in the $1.3 billion range. FactSet is around $1.26 billion. So we'll see what happens. Now, stock movement. The last quarter, AMC stock fell 3.7% the next day following its results, which were boosted by the company's highest quarterly attendance since 2019. AMC shares have fallen 72% in 2023 compared to the S&P 500 index's SPX gain of 14.3%. Here's what the analysts are saying. Quote, we expect AMC is well positioned against an improving industry backdrop. We expect 2023 North American box office to end up 20% over 2022 or 78% of 2019's box office, with AMC at least maintaining its 22% market share, if not expanding with its vast network of premium large format screens. Moviegoers are finicky with content these days, but we are seeing that they are increasingly opt for premium screens and a larger basket of high margin concessions. Alicia Reese from Wedbush wrote, liquidity continues to matter since AMC is still burning cash. Free cash flow for the quarter is estimated at a usage of $83 million, including a usage of $26 million from operating cash flow. However, unencumbered cash should increase liquidity quarter over quarter from $435 million in Q2 2023 to $650 million, aided by equity capital raises from the sale of 40 million shares at an average price of $8.14 per share via the company's now completed at the money offering. Eric Handler from Roth MKM wrote, he does have a $15 price target on AMC stock. Another analyst says, the overwhelming success of Taylor Swift The Eras Tour has come as a boon for investors, especially during times when Hollywood release schedules have been affected by strikes. The concert movie genre appears to be gaining traction again. Mike Hickey wrote from Benchmark. So it seems like all of these comments are pretty positive. I think it's really going to come down to, do we get announcements of further dilution or not? And then what's the loss? Because we ultimately have to get that loss back to a profitable place. Just recently, within the last 6 months or so, I believe not last quarter earnings, but the earnings before that, AMC stock yet again fell following their earnings, but AMC actually posted a free cash flow of $8 million. So AMC was actually profitable for the first time 2 quarters ago in many years. And the stock just didn't react to it because I believe the court proceeding was just so much of a weighing factor just above the stock's head. There was not much the stock could have done to actually rise. I mean, after all, just look at, what the stock has done in that time, like literally nothing. And you actually turned a profit. That's one of the biggest achievements and milestones a company like AMC could ever have. I mean, losing money for so long, the risk of bankruptcy, all of that. And then you finally turn a profit and the stock just doesn't react at all. That's showing you something. Now, AMC, we've also reported this as well. You have seen some traction in AMC's bonds, its debt, its credit default swaps. There has been more buyers of the 2029 bonds and sellers of the 2026 bonds. That is, generally speaking, a pretty bullish sign. And that has been happening over the last 12 days or so for AMC stock heading into their earnings. So it looks like someone has pretty high expectations that AMC is going to do well. And you always want to look at the bond market rather than the stock market. The shares of a company could do great things, and then you could get a bad earnings report, or even worse than that. So that's telling you a lot that the bonds, the debt itself, has been attracting investors. That's a very, 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 very good sign. And I think that it's kind of a leading indicator heading into earnings. Now, if we look at some of the data here today for AMC, you have one institutional trade worth $168,000 with a positive order value of 0%. It is a November 24th, $10.50 put for $168,550. So that's just really low. I mean, we're just really not seeing that much activity today for AMC options. Over the past week, you had 42 orders totaling $3.37 million with a positive order value of 68%. Now, the put to call ratio is probably the most bullish that you will find out of any stock. This is a core reason for my thesis on why AMC stock is going higher from here. There's just not a lot of people that are betting against AMC in the options market, and that does allow AMC stock to potentially rally a lot more than even just some random stock that reports good earnings. AMC's put to call ratio is at 0.66, back to levels in which you were at before this court proceeding ever started. So it looks like the bears, for the most part, are pretty much gone besides the shorts. People are not taking leveraged bearish positions at this point. And I think a lot of that could have to do with the fact that AMC stock has fallen so much. You're back down to your January 2021 prices when literally everyone thought AMC was going to go bankrupt, when there was not a lot of expectations AMC was actually going to survive. So I think that puts us in a prime position now. If AMC does have good earnings and an improving financial position, a lot of people are probably going to opt to go long in AMC, at the very least, potentially even cover on short positions. Now, take a look at this. Options expiring by this Friday. You have a put to call ratio volume of 0.41, meaning there is over 2 calls being bought for every 1 put being bought. That's incredibly bullish. Put to call ratio, as far as open interest, is at about 2 to 1. So today you're seeing a lot more calls being bought than puts, like 2.2 calls for every 1 put. I know it gets weird once you put the decimal point in there, but you have a put to call ratio, open interest of about exactly 2 to 1. So that is pretty dang good. Calls open interest of about 64%, put open interest of 36%, volume of 71% on the call side, and 29% on the put side. So people are very dang bullish heading into earnings. Now, with these numbers, you really have to take them with a grain of salt because I do not believe them in the slightest bit. I do think personally it's no coincidence that the SEC passes a rule to shine a light on short selling, to basically expose some of these short positions, what kind of collateral is being used, who is facilitating these short positions, and AMC's short interest falls at the fastest pace you have ever seen. Even during January of 2021 and June of 2021, the short interest went from like 22% to 14%, and the stock went up 20x in value. Well, AMC stock did nothing but fall, but the short interest apparently went from about 30% down to 6%. And you had zero bullish price action. It was actually a bearish time for AMC. So, I mean, I just don't think those comparables shine any light or of credibility on the fact that AMC short interest went from 30% to 6%. That's the estimate right now, 6.16%. I just think a lot of the short interest is being hidden and being covered up as of right now. And that's because of options. You can use options to make it look like you have covered on your short position when in all reality you have not. You do have an estimated $124.5 million worth of short positions. Days to cover 0.58, 12.18 million shares that are currently sold short. Shares out on loan 13.61 million shares. Cost to borrow 1.25%, utilization of about 30%, and a short score of 48.81 out of 100. Cost to borrow fees over here, the live numbers. Cost to borrow max 14.39%, cost to borrow minimum about 1%, cost to borrow average 1.35%. So, nothing too crazy. Obviously, not the most exciting numbers that you're seeing here, but I just don't even think they are truly accurate, if I do say so myself. So here's the calendar for earnings. You do have AMC here in after hours. You have Walt Disney. You have Twilio, Marathon, Affirm, Duolingo, HubSpot, IONQ, Digital Turbine, and I believe that's Virgin Galactic down here on the right-hand side. So a couple of interesting earnings as well. We'll have to ultimately see, how those earnings come out. I think AMC is probably going to be the biggest mover. AMC stock could easily move 20 to 30% if you do have a really good earnings. If AMC can somehow turn a profit, I don't think that's going to happen. But if we could, you could see the stock up over 30% off of that. Something we have just not seen in a very long time. It's been a long time since we have seen a good earnings report that actually caused AMC stock to move higher. Now here on the day today, stocks are mostly in the red. Not a terrible day across the board. If you're looking at QQQ, that is down about a third of 1%. You've already confirmed to me you're probably going to break out higher from here. This is a long-term cup and handle formation. If you take a look at the average just cup and handle formation, I did post this in the trading community. And if you guys want to join, link down below in the description of this video. But this is your typical cup and handle formation. Just let's look at this compared to where the markets are right now. It's just one of the most obvious things you can even see right now. Look at that, and then take a look at this, just side by side. Hopefully I'm not covering too much of it up. I think you guys get the point, but I want to be dramatic here, just because why not? Look, just take a look, okay? If that's not a cup and handle on the markets, I don't know what is. It's literally textbook. So when you break out above this downtrending line of resistance, that can give you a big move higher. Okay, so that's kind of what we're looking at. You could even target new highs for the NASDAQ as long as things go as planned. Now, there's no specific timeline of how long these things could take, but I do think the point is simple. You probably don't want to be bearish here on our markets unless something crazy happened, unless, all hell were to break loose. It's just not one of those situations that you probably want to be bullish or bearish for. Now, we don't have a lot of economic data coming out this week. You do have the Michigan Consumer Sentiment Survey on Friday. Today's big catalyst was Fed Jerome Powell. He said nothing about Fed policy, so that was good, right? That was bullish. But he didn't necessarily confirm the rally. He didn't deny the rally. I think him just not saying anything means that he's content with what's happening in markets, so that's great. Your bond auctions on your 17-week bond auction came in pretty good. We're still waiting for the 10-year bond auction. Anything under 4.61% is going to be seen as good news, going to show good demand, potentially drive yields down throughout the remainder of this day. So if anything else is going to move the markets throughout today, it's probably going to be that 10-year auction. You do have Fed Williams, Fed Barr, Fed Jefferson that speak as well throughout the day today into the afternoon, in between about 1:30 and 4:30 or so. They could move the markets if they say something egregious, but probably not. So the biggest thing that's probably moving our markets is just a little bit of a relaxation, because stocks have went up very aggressively at one of the fastest paces we have seen literally ever in history. But you're also seeing wholesale inventories, and we're still under this notion of good news is bad news is good news. Wholesale inventories month over month went up 0.2%. So maybe a little bit of bad news causing stocks to fall a little bit. Who knows? I'm not really going to stick my head out on a limb to say that. Now, if you're looking at the Stock Tracker data, you have calls in the money of 11,000, calls out the money 81,000, puts in the money of 8,000, and puts out the money of 45,000. So clearly bullish to the call side. Now, if you want to take a look at AMC stock, again, my personal opinion, if you do see downside, if for whatever reason AMC does scare people with their earnings numbers or with dilution, there's actually a big difference there. So dilution could send the stock down a lot. If AMC says we're getting ready to raise more capital, that's going to scare a lot of shareholders. You could easily see AMC stock fall to $8 or even back to the $7 range. As long as you don't hear anything about dilution, I think AMC stock's probably going higher, because I think at this point it doesn't make sense to sell AMC, go short on AMC, or do anything besides buy AMC. Just given where the price is, given you're back to your same levels you were in January of 2021. That's just my opinion. I'm not a financial advisor. I'm not a financial planner, but I do think AMC stock is going higher. The question is, do we just have mediocre earnings? Do we come in line with estimates? If that's the case, you probably can rally to the low teens, right? 13, 14, 15, that's likely. If you have really good earnings, somehow AMC brings in a lot more to the bottom line, then you could see a high teens move, right? 16 to 19, 20. If you do see somehow AMC does turn a profit, then I think over the next couple of days, you probably see the move into that 100-day moving average at $22.89 per share. But again, if you have anything with dilution, AMC stock could easily go back to the $8, even the $7 ranges, because that's what the markets are going to fear above anything else is, are we going to have more dilution here? That's something I'm personally waiting to see. But nonetheless, that's kind of going to do it for this video. The RSI is at 48.63. So even though you're off a lot from your low at $7.05, you're at $10.04. So you're up like $3 from there. The RSI is still under the neutral level of 50. So that supports we could rally quite a bit from here before you're overbought on the RSI. And the MACD is trying to go positive. You're very close. I think earnings is going to do it personally, and that could send the stock even much higher from there, guys. So that is going to go ahead and do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.